Well, howdy there, folks. I hope you're ready to get your flapjacks flipped this week. Absolutely massive week ahead in the market this week. It's going to be a game-changing week in the market. There is one stock that's reporting earnings this week that I think is going to absolutely skyrocket. When I mean skyrocket, I mean I believe this stock's going to go up between 20% and 40% by the end of this week. And I don't usually make many short-term predictions around stocks, but in this situation, I do see this one being quite a gem. And I'll kind of explain to you guys why, and I think that will actually be a change for that company to kind of move into the long term as well. So yeah, a lot to get into in today's video. It's with Apple reporting, let me just say this off the top, with Apple reporting this week, it's so vital for the future of the market. And when I say the future of the market, I'm really talking about the next several months in the market between now and the next earnings season, okay? So I appreciate everybody being subscribed. Thanks so much for being here, as always, folks. Before we get into all the juicy stuff here, okay, I put this on my Instagram. I said, I buy stocks every Friday. How often do you guys buy? And I'd love to hear from you guys. How often do you buy? And the choices were every week, 30% buy every week, 20% buy twice a month, 26% buy once a month, and 25%. They let their wives' boyfriends, their wives' boyfriends don't even let them buy, and that's 25%. Oh, man. It seems like a lot of you guys are just getting pushed around by your wives' boyfriends. That's unfortunate, okay? And then how often do you sell a stock? Ooh, 22% you guys say when my wife's boyfriend tells me to. Oh, man, that's rough, okay? Another 12% you guys say after the stock's gone to zero, 15% after it's 10x, and hey, 51% of you guys got your stuff together, okay, when the valuation is no longer attractive. I appreciate that, okay? I appreciate the 51% that have their stuff together. The other half of you guys, I don't know, man. I don't know about y'all. But anyways, guys, in the Patreon, $10 tier is closing down in the next few hours here. So if you want to get in the $10 tier, get in ASAP. There will be pinned comment down there so you can see exactly how I build a portfolio, the moves I'm making each and every week. And then after that, we're only going to have the $19 tier. So that is closing in a few hours from now. So there will be pinned comment if you want to get grandfathered in to that tier. Alrighty, so Sofi first off reporting this week, okay? Sofi. A lot of people always want to know my opinion on Sofi and whatnot, right? Here's what I'll say about Sofi. Sofi, I'm actually very impressed. I've listened to a couple of their conference calls. I'm very impressed with the type of clients they have. But this company does have a lot of issues, and it seems like every time they get past an issue, they get a new issue, okay? And I just put up 3 big issues they've had to deal with recently, okay? Student loan pause, obviously, and then that kind of being dragged out further and further. Recession fears, obviously, this drags into all these sorts of companies, and then banking-related fears. Now, a lot of people like to say, no, SoFi's not a bank, okay? It's a tech company. At the end of the day, SoFi's in the banking business, okay? And if you want to deny that, that's just denying facts, okay? This company is in the banking-related business, bottom line. They are a fintech company, and when you look at their amount of services they offer, obviously, a lot of them compete directly with big banks, okay? And so the bottom line is it's just ran into issue after issue after issue for this one, okay? They are reporting earnings Monday before the bell in regards to SoFi here. Now, this is what everything is for SoFi. If you want to think about this stock, bottoming out here and kind of moving up from here, which has kind of been on a $5 to $7 range, this seems like for quite some time now. This is everything for this company because they've been posting great revenue growth quarter after quarter after quarter after quarter for the longest time now. Their issue is not revenue growth at this company in terms of stock price. Their issue is profitability. Okay, they've been taking massive losses in the past. If they can cut their loss by 50% on a year-over-year basis, that's very impressive, okay? And so they've got to continue to make progress on this line and try to get, in the next 4 to 6 quarters, get to a place where they're break-even EPS-wise and then starting to actually make some money on the bottom line, okay? It's going to be important for SoFi there and obviously all SoFi shareholders. Monday after the close, Logitech's reporting. Now, Logitech's not a stock I personally own, but it is an important company I will be paying attention to. The reason being is I have a fairly big position in Corsair Gaming. I own that stock in several different accounts. And at the end of the day, when Logitech's doing fairly well for their business, Corsair's doing fairly well for their business as well, right? They're competitors, but at the end of the day, like when hardware's in a good cycle, obviously both can benefit from that. Now, both these stocks are in a bottoming out process that really started about 6 months ago, and obviously both of them have moved up quite a bit. I think Corsair bottomed out at $10 or $11. I think today it's probably $17, maybe approaching $18, and Logitech obviously bottomed at 41. It's at 59 here today, but these stocks these are good companies for the long term. They're just in a very tough place in the short term. But there's a lot of things going for the better for them, including container costs coming down in a massive, massive way to ship your product overseas. That will be very positive for these companies' margins. And don't be surprised, I don't want to speak on Logitech too much, but don't be surprised if for Corsair Gaming, you see their margins increase and increase rapidly throughout this year on a year-over-year basis, okay? AMD. Now, you know I've been interested in buying AMD stock. The question is, am I still interested in potentially buying AMD stock? And the answer to that is, yes, I am still interested in potentially buying AMD stock. I don't own any of their stock right now, but I am interested. I've just been trying to wrap my head around what is really going on with AMD, okay? Because here's the issue. The company's expected to have revenues go down about 10% on this quarter, which is never fun to see, but you understand the environment we're in. You can understand why revenue would be down in this current quarter, right? They should get back to nice growth next year. 2023 is not going to be an exciting year for a stock like AMD for the most part, right? In terms of the revenue side. But the issue I'm seeing is their expected profitability to go down by about 50% or so. So 10%, but then 50% down. So I'm really trying to figure out like where AMD's real profitability is going here. You know, the analysts have them at 301 for this year, 431 next year. Is that realistic? Are these numbers low? Are these numbers high? Are these numbers correct, right? And that's really what I'm trying to figure out in regards to AMD. So I'm still interested in potentially buying the stock at some point this year. It's just I'm really kind of lost with the number side of this and trying to figure that out, okay? Wednesday, just a bunch of random companies I'm interested in hearing. CVS, I'm looking forward to hearing their earnings. Reason being is I own Walgreens stock, which is in my dividend portfolio, and it is a stock I actually just bought. I just bought more Walgreens on Friday in my dividends only account, if I recall. Wingstop, interested to hear them. They're one of the few companies that have been experiencing deflation for a while. Chicken prices were going down, so they were actually experiencing deflation with their product costs, which is different than most companies. So interested to hear Wingstop earnings. I actually want to try their chicken sandwich at some point in time. I don't eat much meat, but I will. I'm a sucker for some fried chicken or something chicken related every once in a while, man. Estee Lauder, and I want to hear what Estee Lauder has to say. Obviously, I own two companies that are in the cosmetic space. They're more of the lower end, obviously Elf and Honest, but Estee Lauder, I also like to hear somebody like them because of Nordstrom. I own Nordstrom in my dividends only account as well. And so this is, Estee Lauder customers, those are Nordstrom customers. And, they kind of go together. Is that market weak or strong right now? Etsy, I've been interested in potentially buying Etsy stock. I haven't bought it yet, but here's what I'm keeping an eye on. The only problem I see for Etsy is it is very niche compared to obviously something like Amazon or Shopify. And I when I look at Etsy, I'm like, do I really want to buy Etsy and not buy Amazon or Shopify, right? Because there's only so much money to go around. So let's say I got $10,000 to buy. Am I really going to put that money in Etsy stock over Shopify or Amazon? That's a tough decision, okay? Qualcomm is a stock I own in my dividend-only account, and they're reporting after the close, massive semiconductor company, reporting after the close on Wednesday. And I got to say, Qualcomm's one of my biggest regrets, to be honest. One of my biggest regrets. I mean, this is a stock I own in the dividend-only account, and I didn't buy it nearly heavy enough. I knew I was stealing money when I was buying this stock, and I did not buy it heavy enough. And I watched the stock start to go up, and I chose not to buy more and more shares, and that was just a mistake. That's the best way I can put it. So you can say, well, profits are profits, but at the end of the day, I should have bought 10x the amount of shares I bought in that one. I knew it was stealing money, and I just, I chose not to buy more shares, and it was a mistake. So, nonetheless, very important one. Shopify. Shopify is reporting earnings on Thursday. Now, this is the third best performing stock so far in my Patreon portfolio. It is doing very well for us so far, up 25%. Obviously, huge growth company for the long term. And, my thoughts on Shopify. Am I planning on buying more Shopify shares? Specifically, if the shares go up. Let's talk about that. Okay, am I going to buy more Shopify stock if the stock price goes down? The answer to that is yes, absolutely. Now, if Shopify stock goes up, am I interested? It really depends on how much it goes up. If this stock goes up 20, 30% this week, I'll probably not buy any more Shopify shares, and I'll probably just become a holder. If it goes up 5, 10%, probably not changing a ton for me, and I'll probably continue to be a buyer of this stock. So it really comes down to how much it moves up, if it moves up. And if it moves down, I'm going to be a buyer of the stock. I love Shopify for the long term. I love Tobias, the gentleman that leads the company. I love their business model. I love everything they're going after. I think long term they're going to be one of the most profitable companies that you can find in terms of their net income margin. It's just incredible. So I love that one, and I'm hoping it goes down on earnings. Like if you ask me, do I want to go up or down? I'd rather have it go down because this is one of those stocks. Amazon's obviously a stock I'm buying until the end of this year, and I would love to buy Shopify until the end of this year as well in regards to that one. Okay. Now, Apple. Okay. So this is an interesting situation. Obviously, this stock matters so much. Before we get into the numbers, what I think is going to happen here and whatnot, this stock matters so much for the market. And the reason being is this is the last big tech company to report. Okay. Meta already reported, Google already reported, Amazon already reported, Microsoft already reported, Tesla already reported. All the biggest big dog companies have already reported. Apple's the only one that hasn't. And so much pressure is on Apple stock in terms of if you think the market's going to go up, the market's going to go down, there's so much pressure on the stock. Because if they come in and report bad earnings or bad guidance, is going to leave a sour taste in the entire stock market's mouth for the next 2 months. 2 months, okay? Because that's what everybody's going to remember is, wow, remember Apple's numbers. Now, if they come in and report solid numbers or even good numbers, then, it's off to the races in terms of the market from there. Because then you got through all the biggest of the big dogs that moved the market. And so if we got, now I don't know if that's the situation. We'll get into the numbers here in just a moment. But you got to understand, this is the fate of the market in the next 2 months. It is not Jerome Powell. It is not the Federal Reserve. For the next 2 months, it's going to be dependent upon what happens in Apple earnings this week. Because that will be what either, he puts a sour taste in everybody's mouth or everybody says, okay, that's the big dog. All right. Now, in regards to Apple, there's a lot of people that could be making a mistake here. Okay. Because everybody saw Meta go up massively on earnings. Okay. Amazon went up massively after hours on earnings. Then they got into the conference call and the stock went down slightly. Everybody saw, obviously, Microsoft move up nicely. Everybody saw Google move up nicely. And so the thought process now is Apple has to go up, okay? Not so fast. When everybody thinks like, oh, it's just easy money, I can just buy call options this week in Apple because these other stocks all went up, so Apple's going to go up as well. Every time the market wants to trick you into thinking it's easy, it takes you there to that place, right? Now, there's some issues here, okay? First thing is EPS is expected to decline in the current quarter. The question is that the only bit it's going to decline? We know Apple's always got share buybacks on and whatnot, but we haven't seen Apple do any massive employee cuts at all. So if anything, their employee expenses have probably grown quite a bit on a year-over-year basis. Now, maybe they've pulled back on marketing. Now, the question is, if they have pulled back on marketing spend, right, which is something that could help your EPS, which I haven't seen a ton of Apple advertising recently. If they have pulled back on that, well, usually that hurts revenue growth. So it is something to keep in mind here. Now, let's speak about revenue. Revenue is expected to be down 4.4% year over year here. Okay. Now, here's a troubling part of that. Is that really all that revenue is going to be down? Think about this. Okay. We got word recently that MacBook revenues, or MacBook shipments, I should say, were down a shocking 40%, 40 flipping flapjacking percent. That makes you think, oh my gosh, if MacBook business or the Mac business is that bad, okay, I shouldn't call it the MacBook business. I just think about MacBooks all the time. If the Mac business is down that much, then you have to assume iPad business is going to be down pretty darn substantially as well. And if you think iPad business is in a bad place, then iPhone revenue might be not in the best place as well, right? Now, services can hopefully do good, and they're always raising the price of their services. And, there's no such thing as grandfathered price like my Patreon, okay? In Apple, they just keep going up on price. It doesn't matter how long you've been a customer in terms of their services, right? iCloud, I always have to pay more and more for iCloud. They go up in price, and there's no other option. Be like, oh, no, I'm not going to pay that. It's either, okay, now you don't have iCloud, or you got to pay another $5 a month extra or whatever. So that's something that I think is probably helping Apple here. But nonetheless, folks, this is obviously, I think it's definitely going to be a grind of a quarter to try to, beat that number there. Now, the June quarter is expected to have revenue up 2%. And to that, I say, how? If the Mac business is in as bad of a place as they're talking about it is, right? If the iPad business is in a bad place, there's no exciting stuff that's happened recently in terms of AirPods or headphones or anything like that for Apple. And, the services business is eking out a little growth here and there, but iPhone's not super exciting. Like how did they get to 2% growth? And I think that's a fair question, right? So this could be, maybe they come in and beat this number and maybe revenue stays flattish year over year or down 2% or something like that, or up 1%. But what if they guide for a bad quarter next quarter, right? And they basically have some weak commentary there. And also, analysts expect them to have an increase in EPS year over year. Is that realistic? I don't know. I'm not super convinced of that, right? So this is where you kind of get into some trouble with Apple. Now, if they come in, they beat this number, they have a nice guide, then it's off to the races. And Apple would be at an all-time high probably within 2 weeks. So do keep that in mind. There's two sides of the story. It's just, when you kind of add it up, it's like, dang, it's hard to see that sort of growth there, right? Apple Watch is likely decently strong this year, so that's good for them. But, man, I don't know. I think these numbers are really, really hard to hit. From my understanding, China's really opened back up. Can that help Apple? If it does, how much does it help Apple? So I don't know. There's a lot of questions. That's all I'll say. There's a lot of questions around this earnings for Apple here, okay? Now, in terms of the stock, I think it's going to skyrocket this week. I believe it is Fubo, which is reporting earnings before the bell on Friday. The stock's like 114 right now. I think it's probably going to be, if I had to guess by the close of Friday, it's going to be 135 to 150. Now, in terms of Fubo, I am a long-term investor of this company. I do believe in it a lot for the long term, and I believe this is going to be a change for the company moving forward and kind of where the stock price goes and those sorts of things. Now, the interesting thing with Fubo, okay, is they expect to have 25% revenue growth in the current quarter. And they're going to get there by growing customers. They obviously went up on price recently, kind of like Apple does on everybody, right? And they're attracting, obviously, advertisers in mass right now. And I'm signed up for Fubo and YouTube TV. I'm signed up for both services. And I can tell you this. Fubo doesn't throw nearly as many ads as YouTube TV does. Obviously, Google's way ahead when it comes to advertising, right? But what I see there is like so much long-term growth ahead for Fubo, because when I watch YouTube TV, I get, usually every time I watch, I'll get between 3x and 5x the amount of ads, which tells me Fubo has a long way to go in terms of their advertising business. And obviously they're growing that, but it has a lot of growth ahead over the coming years. Now, in terms of current quarter, they expect to go from a loss of 89 cents to a loss of 45 cents. That is, a pretty epic decrease there. If they can beat that, it would be even better for the stock. And then continue to make progress on this company, right? And they're expected to just continue to make progress quarter after quarter after quarter when it comes to the loss they've been taking and getting that closer and closer to break even and then cash flow positive for this company overall. Now, in terms of what gives me a lot of confidence going into this earnings is what it looks like to me is based upon Google's trends data, Fubo's business is in a far healthier place than it's ever been by far and away, okay? So if we go back to the week of, I just picked a random week of a really weak week that's usually, for Fubo out there. February 27th through March 5th. Football, NFL season's already over. College football's already over. NHL and NBA playoffs aren't going on at that particular time. So that's just usually a very weak time of year. And this is obviously a time of year we just went through. So if we look at the Google Trends data for Fubo TV over the past 5 years, during this specific week, we were at 24 last year, okay? Now, the same, pretty much the same exact week, that you can't put it to the exact same day, right? But February 26th through March 4th, we are over 10 points higher in 2023 versus 2022, which means Fubo TV is much more relevant than it was last year at this time. And it's really not even close. And I mean, obviously, it doesn't take a rocket scientist to be able to look at these charts and say, oh my gosh, Fubo's far more known, obviously, over the past 6 to 9 months than it was at any point in the past 5 years, right? Now, if we pull up another week, let's just look at last week, right? April 16th through the 22nd. Fubo TV was at a 41 when it comes to 2023 numbers, okay? What about last year, that same week, pretty much? April 17th through the 23rd, 2022, it was at 30. So 11 points less last year in terms of the Google Trends data than this year, which shows Fubo's getting far more searched and people looking to sign up and those sorts of things, right? If we go back to 2021 for that same week, right, roughly, right, April 18th through the 24th, it was 22 points lower in 2021. And if we go back to 2020, Rona time, 33 points lower, right? And so I believe that based upon the Google Trends data I'm looking at, based upon their last earnings and what I think we're about to hear in this earnings, is I actually think Fubo's really basically getting to escape velocity on this company. Escape velocity basically meaning a point of the business just kind of like building out itself in terms of like you can throw a little marketing behind it, but it's just you're starting to get so many customers, you're starting to get so much relevancy that if somebody thinks about, I'm going to sign up for a streaming service, I'm going to sign up for Fubo, okay? And it's really them and YouTube TV, in my opinion, in terms of the long-term competitors against each other. But I believe they're getting to escape velocity, which obviously, if you think about, like, I actually think Tesla over the past 1 to 2 years has reached escape velocity, meaning essentially, like, like so many people are starting to get Teslas now. It's just like, an overwhelming, like, just push that Tesla doesn't even really need. They don't have to really market if they don't want, and obviously they don't. There's really no reason to in terms of like, spending money on advertising and whatnot, because it's just like people tell more people and it just kind of builds out from there because you've kind of reached escape velocity, right? And I believe Fubo's just barely getting to that stage where like everybody's going to be telling everybody about this service, and it's just going to continue to build. So based upon Google Trends data, based upon the last earnings, based upon what I think is going to happen this earnings, the biggest thing for them now is not just proving they're attracting more customers, more advertisers, and continue to boost up that revenue, but it's also going to be about cutting down that loss lower and lower and lower and lower this year. So hopefully by the end of the year, you can see the light at the end of the tunnel and like, oh wow, 2024, they're going to break even on this company, right? That's where they have to get to. And that's a game changer for this company, because the only reason that stock's $1 is nothing to do with customers or revenue or anything like that. It's because of massive losses they've been taking and people saying, is this company going to be able to make it to the other side, right? It's the only reason. So if they can continue to cut down those losses in an epic way, it's off to the races for that stock. And then the long-term growth there for that industry is it's so big, it's hard to even like fathom. I mean, Fubo could have a day when they have, 5 million, 10 million, 20 million subscribers. And that wouldn't even be like a huge number, in terms of like what they really could be long term, because this whole game is going towards streaming. The days of cable TV and satellite TV and whatnot, those days are going bye-bye. And that's why if you look at something like Dish Network stock, or Dish Network stock, you can see what that stock price has done, right? DirecTV, if I recall, got bought out for a while back for, very, very cheap valuation, because everybody understands like the whole wave is going towards streaming. So we'll see what happens with that one, but I believe it's going to be likely a massive week for Fubo. We'll see. As somebody that's a long-term investor in that stock, regardless if it is or not, it's a spec stock for me, and I think it's going to do well over time, but we shall see. I appreciate everybody. Thanks so much for joining me. Once again, Patreon Squad, that is $10 tier, is closing tonight. So if you want to get in there before it ends to see the moves I'm making in the market with my real money portfolio through Fidelity Investments, check that out. In the comment down there. Thanks for watching. Have a great day.